Hey guys, good morning everybody. Today is Wednesday, September 17th. It is 6:22 right now. We got market opening up in about 8 minutes. So I'm going to go ahead and mark up liquidity real quick and we'll get started shortly with our analysis for today. Just another heads up, guys. Today is Fed Day. So the Fed interest rates are going to be coming out later today at 11 o'clock Pacific, 2 o'clock Eastern. So just something to keep in mind, guys, as we analyze the market for today. Today might be a bit choppy, might be a little slow, or I mean, the opposite could happen as well. So we'll see what happens here in a few. Once market opens up, my guess is that market's going to be kind of slow because it seems like a lot of people are going to be on edge because of the interest rate cuts. So we'll see. Hey, Singh, morning. Yeah, Singh said he's looking for bullish potential, potentially looking for a pullback to enter long, but we'll see. Yeah, same here. Overall direction of market structure here is looking bullish. I'll do a full analysis in a few once I mark up liquidity here real quick. But I do agree. Price may continue to push up and then it may dump down a little later uh, once the interest rate news comes out. So I was tempted to move my pending limit orders a little higher for for my swing positions, but I'm probably gonna hold off on moving them up right now, specifically because I'm just gonna be waiting for the market reaction to the Fed cut, and then I'll make some adjustments or I'll make some entry moves. We'll see. Let me check my swing positions. Yeah, because we're still up here. So if price does drop, about 500 points or so, I'll get filled right here. So I'm just gonna leave my entries just pending over there, waiting for market to possibly dump later at 11, and then I'll see if I get filled, and then I'll go from there. I'm not expecting anything too crazy. Right? I'm expecting maybe a 500 to 1,000 point drop, close to it. Maybe not 1,000, but closer to 500. But anyways, guys, I've marked up liquidity over here. So good morning, everybody. Today is Wednesday, September 17th. It is 6:24 right now. We got market opening up in about 6 minutes. I've marked up liquidity over here. Closest level of liquidity above is at 46,191. Closest liquidity below is at 46,165. Just another reminder, guys, today is Fed Day. So the Fed interest rates are going to be coming out later today at 11 o'clock Pacific, 2 o'clock Eastern. We're expecting a cut 25 basis points. So with that being said, I'm expecting price here to kind of dump down a little bit closer to 11. However, the overall direction of bias is pretty strong. So you can see over here at my overall structure, it's pretty much bullish on the 5-minute, 15, 30, and 1 hour. The 1 minute and 4 hour are both neutral. Let's take a look at the overall trend right now. Overall trend here is bullish. So you can see over here on the 1 minute, 5-minute, 15, price is above the pivots. Trend meter is green. Pivots are angling up. So on the lower time frames, we are in a bullish trend. Looking over here on the higher time frames, 30-minute, 1 hour, 4 hour, price is also above the pivots. Trend meter is green and pivots are angling up. So I'm mainly looking for buys today with regard to trend and market structure. Looking over here at the orb, guys. So for the orb here, I'm changing things just a little bit. I did a pretty deep back test. I did a pretty deep sample on historical data. So we typically apply the 2-minute orb. I'm going to apply it on the 5-minute right now because of the choppiness of the market. So a few changes here for the orb, guys. I'm now going to be marking up the first 5 minutes of market open for the opening range. And then I changed my TP stop loss from 40.20 to 50.25. So just a 5 point difference. And then my entry is just going to be a little more lenient. So instead of entering on the orb higher orb sell, I'm adjusting my entry about 5 points. So I'm going to cover for about 1.25% of the ATR. So just a little bit of difference there here, and I'll put it right here real quick. So slight changes to orb, momentum orb entry. Opening range from 2-minute to 5-minute. TP stop loss. Spread to 50.25. Um, I think that's about it. That's all I'm really changing to it. Entry, entry, uh, looser. I think that's about it. Just a couple changes right there. There's a little bit of a more of analysis that I'm doing over here as well. I'm looking at like how Asia session moved, or not Asia, how London session moved. So basically from London to here, price is pretty bullish. So what I'm looking for here is a possible continuation. This is going to line up with what I'm looking for anyways, because I'm looking for a buy since my overall trend and overall market structure here is bullish. So looking over here, I'm just using this as market structure confirmation from London session. London session is pretty bullish over here. So I'm mainly going to look for buys, but I was already looking for buys here because my overall market structure was bullish and my overall trend here was also bullish. So that doesn't make a difference for me. I think that's all that I really changed for the orb here, guys. Just slight changes here because of the choppiness of the market. So instead of going from the 2-minute orb, I'm doing the 5-minute orb. It's the same thing. They're usually going to line up to be at around the same place. TP stop loss is just a little wider and looser entry. So 5 points leeway. And you guys will see what I mark up as price continues to move along. So good morning, guys. Looks like majority of you guys are here so far. Price is pushing up as we speak. This liquidity here got pretty much invalidated. I'm going to go and try to mark up some areas of structure here. So let's see from this lower high right here, we do have a resistance. We have a support from right here. Support from right there as well. We got a lot of supports down here. They're not going to be super relevant because price is so far from it, but I'm gonna mark it up anyways. All right, we're pushing up kind of hard right here. So we got market open, guys. If you're taking the momentum breakout, it's going to be a buy. You can see there's a buy signal right there. So if you guys are looking to take the momentum breakout, it is going to be a buy today. The thing that you want to be careful for is obviously price here is pretty much pushed up pretty heavily. We do have a imbalance right here, which will be a nice confluence. I'll mark up the imbalance a little later. I don't want to make the chart too messy. It's pretty messy here as is. So, all right, guys, market is open. I'm gonna go ahead and mark opening price right here. See what's here so far. Morning Singh, morning David, morning Daniel, morning Sam, morning Lila, morning Maria, morning Karen, morning everybody. So market is open now, guys. Price is pushing up pretty heavily. The momentum breakout is for a buy right there. If you guys took it, it looks like it probably hit already. Yeah. So full TP on the momentum breakout right there. If you guys took it, it was for a buy. So first entry for the day was a buy. Reason for the buy right there is because we had a buy signal right here. Market opened up at 6:30, big push to the upside. This thing right here is going to be a little tricky because of the this huge candle and open. So I'm identifying the orb over here. So if you guys are just joining in, I just gave a little update. I'm making some slight changes to the orb here. We typically apply the orb on the 2-minute time frame. I'm changing it from the 2-minute to the 5-minute because of the morning chop. You know, as you've seen here, the market's been super, super choppy on the open, exactly like what's happening here. So this is why I'm not looking at the 2-minute. I'm extending it out a little bit to the 5-minute. It doesn't make a big difference. It's a slight difference. If you go back and back test it, they're going to line up to about the same area, but there's going to be some days where you can prevent the chop because sometimes you'll see movement here where the first two candles creates a big range. It pushes up a little bit and then it fakes out back into the into the range. So that's why I'm trying to avoid that because we've been getting caught in a lot of the choppiness in the morning, right? Because we get this big push and then it ends up like going up just a little bit and then it comes right back down, or it comes down right here and then it comes right back up. So what I'm doing here is I'm just extending it out a little bit further from 2 minutes to 5 minutes. The TP stop loss has changed from 40 to 20, or from 40 20 to 50 25. I'm just adding 5 points to it to give it a little more cushion. And then on top of that, my entry point is going to be about 5 points away. So technically your stop loss is about 30. We're only setting it for 25, but we're giving it some cushion there so that if it does pull back a little bit, because this is what happens a lot too. Price pulls back and it pulls back just a little bit further where it just triggers a stop loss and then it goes straight up, right? We've seen that happen so many times. So just changing it a little bit, guys. Not much of a change there. I did a deep back test yesterday, ran about 1,000 samples. This is what the best criteria is right now with this type of market that we're currently in. Nice work, ARC. So ARC just passed another handful of examples, great, or not examples, evaluations. So great works, ARC here. Just passed another account right there of evals. And then Smith over here as well got the breakout. Nice work, guys. A lot of you guys here caught that. I think Jonathan caught it as well. This has been hitting a lot, guys, the momentum breakout. I'm trying to get figure out a way to fix the or not really fix, but adapt to the risk to reward because I don't like the 1-to-1 as much. The the 25.50 might work here, but there's a lot of times where price will kind of fake out and then come right back up. So I have to do the data to see if the 1-to-2 works well on the momentum breakout. If that's the case, then we can continue applying it and maybe I'll switch from the orb to the regular breakout. But for now, I'm going to stick with the orb because I want to keep a pending order for my entries. But nice work, guys. So Smith got it, Talanji got it, Art got it, Jonathan got it. Great work, guys, on catching that breakout there. Hopefully Jonathan got it too. I think he got it, I'm pretty sure. Oh, and one other thing too here. So one other thing, so Glenn is also asking about the profit trigger. So I'm no longer using stop loss and profit. I'm just gonna go for the full profit target, guys. Because the thing is, I did the data on it too. You're going to have a higher win rate, but your expectancy is going to drop quite a bit if you move your stop loss and profit. Because what happens is because of this choppy market, a lot of times it's gonna fill, it's going to pull back in profit to stop you out in profit, and then it's going to go straight through it. So for me, the data that I pulled over 1,000 samples shows that it's better to take the loss long term. So like yeah, short term it's gonna hurt because you're gonna get screwed a lot of times, right? Sometimes price is gonna get really close to your target and it's gonna come in reverse on you. But long term, over a 2 to 5 year period, you're gonna make more profit if you just go for the full target. So I'm not gonna be adjusting. I'm no longer using a stop loss in profit, guys. Just heads up with that there. So we have a possible orb right here, guys. If you guys are looking to take it an orb high or orb buy, basically. Right here, price breaks above the 46,320. So 46,320 is going to be the orb high. My entry is going to be at 46,350 or 46 yeah, 315. So 46,315 is where I'm going to look to get my entry. 46,315. So the other criteria here still plays through. If price doesn't pull back and fill and it goes past the target, then I still cancel the order. Right? We got the price closing right here. My entry is going to be right here at 46,315. It's got to pull back and fill right there. If it doesn't pull back and fill, no entry. All right, so I'll put my pending order right there.
Order submitted.
All right, I got my pending order sitting right here at 46,315.
Order submitted.
It's a little bit below the orb high. Reason why I do that is because a lot of times price will come down and then it'll come down a little lower and then it'll push through. If this thing pushes past the target, I got to cancel my order because it's too far out. It'll be considered overextended. So no fill yet. I'm watching this up here. I got to extend this out a little further to 55 just to have an idea. So I'm watching this right here. I need this to come back down and fill my order. If it doesn't fill it, maybe canceling it. All right, so not there yet. Also, another criteria that I looked at is if price doesn't fill by like 6 between 6:45 and 7. So this is like the criteria right here that I noticed too. If it takes too long to fill between this window, it's usually going to be in a choppy market and it should be canceled. So price just hit target right there and never filled our order. So at this point, I'm going to be canceling it. So no entry right there for the orb, guys. The analysis was right, the direction was right, but there's just no fill. So unfortunately, I had to cancel that order, guys.
Michael.
There you go. I just canceled my order. I'll be looking for continuation moves, but here we go. So price broke past the orb high over here. I was looking for it to come back and retrace the fill. It didn't fill, unfortunately. But price here did push past the target. So now that price has pushed up 50 points already, this is overextended, right? Because at this point, price should just continue up higher. If it doesn't continue up higher from here and it retraces back, odds are price is going to pull back into the range. So unfortunately, no fill right there for the orb, but the analysis here played through. Our overall directional bias was bullish. We had a bullish market structure here on pretty much all the time frames. We had bullish trend over here across all the time frames as well. Lower time frames, 1 minute, 5 minute, 15 minute. You can see price was above the pivots. Trend meter was green, pivots were angling up. This indicated a bullish trend with the lower time frames. Also in the higher time frames over here, 30 minute, 1 hour, and 4 hour. Price here was also bullish. You can see over here, price was above the pivots, the trend meter is green, and the pivots were angling up. So with that being said, we have a very, very strong bullish trend over here and a very, very bullish market structure. And the analysis here did play through. We were expecting price to push past the orb, but unfortunately, price did not pull back to fill, so no entry there. So no entry for the orb today, guys. I mean, the analysis played through, but just no entry for the orb. Another heads up, guys, for most of you guys who are here, just another reminder, I'm making slight changes to the orb entry. I'm going from the 2 minute to the 5 minute. I'm changing my TP stop loss from 40.20 to 50.25. I have a looser entry point. So instead of entering at the orb high, I'm covering it with some leeway. I'm going to add in about 1.25 of the ATR, so 5 points. The way I got that was if you look over here at the ATR down below, guys. So the ATR is about 20 points, right? So 20 points, sorry, it's 0.2. So 0.2, 20 points times 0.2% or just 0.2. So see how it's around 4 points? That's where I'm trying to get the leeway. I just rounded it up to 5 because the average is going to be around 5.4, 4.2, 4, somewhere around there. So I just add leeway of 5 points. I did this to my calculations to identify where the perfect entry point would be. And that's just kind of where it's at. So that is where the setup is at. So guys, if you guys are just joining in, there was one entry or there's two entries that showed up today. So far, the momentum breakout over here hit full TP for 100 for 50 points. It pushed up to a full 100. So full TP right there for the momentum breakout. And then also the orb over here played out in our direction, but it never filled. So unfortunately, never pulled back to get filled. And that's the downside of waiting for the high-low break in, or for the retest of it. So I do have the numbers here. If you guys, I did like a pretty deep back test of this, guys. If you guys want to apply the orb, I pretty much tested all variations of the orb. Um, Here, let me see if I can find it. So, I mean, I did a pretty deep back test yesterday. I was up super late just trying to figure out, what the best criteria was for the orb here. So here's some of the criteria right here. Made a whole spreadsheet of this. So best time frame from the orb. Basically right here, the 1 minute, it's good. We were doing the 1 minute before, but there's a ton of false breakouts, right? Or false breaks. That's why for us here, I'm moving from the 1 minute to the 3 to 5. 3 to 5 gives, best balance of precision and signal reliability. And then on top of that, the orb over here, length as well. Like I did a deep back test manually, and I also ran it through AI to get like historical data. Basically, right here you can see for the 1 minute and 2 minute, it's high whipsaws and unsustainable. This is where we kind of got screwed a couple weeks ago because we just keep getting caught up in the chop. The 10 minute is too late. We typically miss the move, and the 15 minute is too late as well. It's you catch the bigger move, but then your risk reward sucks because you might have to do a one-to-one. So the sweet spot that I found here was the 5 minute or 15 minute. Basically, the 5 minute is if market is moving normally, or 15 minute if the market's way too choppy or too spread out. So for example, here, this is the 5 minute orb. If we wanted to extend it out a little further to the 15 minute, we could do from basically from 6:30 to 6:44. Like this could technically be the 15-minute orb. Like if you miss the first orb, the orb push out for the 5 minute, we can look for a possible later entry. Um, I don't really like waiting too long though, because like I mentioned earlier, if the entry doesn't come up by like 6:45 to 7, like this window here is a tricky window because price at this point is already choppy and the direction is already kind of broken in its way. So just a couple things there. Also, another thing that I looked at was, the risk to reward. So I was looking at a lot of different variations of the orb here. So historically, the best is 1 to 1.5 or 1 to 2. Pure 1 to 1 leads to higher win percentage, but worse expectancy, meaning that you'll make more wins, but long term, you're going to make less profit. So the optimal zone is 1 to 1.5 or a 1 to 2. I like going for the 1 to 2 because it's going to yield more profit long term. The 1 to 3 is also looking good, but it drops the win rate to like 30%, so it's not really that good long term. So I did a ton of back testing. So all the changes here, the small changes that I made, that they're all for the better, guys. Like I'm not just making random changes here. I did a deep back test on like all the different types of possibilities, different risk to reward, moving stop loss and profit, etc. I think I have the data over here as well for moving the stop loss and profit. Um, See, I also found this too. So there's two different execution styles as well. The way that I'm doing it, guys, I'm putting my limit order at the retest zone. There's two ways of doing it. You can either wait for the confirmation and just wait for the price to, so for example, here, if you were to wait for this here, for me personally, I'm looking for price to just come down and fill. What you can also do is you can wait for price to come down, bounce off the orb high, and then take the entry once it's actually closed outside of it. The pros and cons here, you're going to get better risk to reward with the limit order, and but the downside is you'll miss the entry a lot of times. So yeah, if you guys have any questions regarding the orb, guys, just let me know. I did like a pretty deep back test on it. Now I'm going to forward test the new settings, but we're going to be continually improving. Basically, on a weekly basis, I'll be running some pretty deep back tests on the orb just to see what are the best settings. Because this is going to be one of the main strategies I'll be applying for the hedge fund. Mainly the orb and also the high-low break and retest continuations. Let's go back to our main chart over here. So let me try to clean this up as much as possible. Obviously, you can see here this price is pretty much pushed through pretty heavily. If we're going to look for a high-low break and retest, it's going to be off this higher high. That's the closest high right there. You can see prices pushed pretty far off from the opening price. We'll mark up from this low here. So from this low up to here, price is pushed up about 334 points. It's due for retracement, but it doesn't mean price is done climbing up. You can easily climb right back up, break and retest, and continue up from here. Um, there's no entries right now. Again, if you guys are just joining in, there's two entries which showed up for today. We had the momentum breakout full TP over here for 100 points. And then we had the orb over here. It broke through and pushed through, but no entry there. We're getting kind of late into the session, so it's 6:46 right. We're not late into the session, but late into the opening range. So if you guys are looking to establish the 15-minute orb, the 15-minute orb is out here. This here is going to line up with the high-low break and retest, right? So the high-low break and retest that I just mentioned right here, for price to break and close past it, it's going to line up with the 15-minute orb. So although I'm not really looking for the orb here, I'll use this as a confluence, right? Because we do have a strategy which is hitting for possible entry here for the orb. We also have an entry over here that's setting up for high-low break and retest. So I won't necessarily be looking to take it as an orb, but I'll be looking for it to break this high here so that I can ride this continuation up higher. So it's a decent confluence right there. And we'll kind of see where this ends up going. Let's see. Nick said he does the 2 minute orb with 2 minute time frame, so it's technically the 4 minute orb. I confirmed the CBD, so if CBD is negative, it's going long. I won't take it vice versa. Yeah. So pretty much same concept right there, Nick. That's why, like for me personally, I think the 2 and the 5 minute are interchangeable. When the market's a little bit slower, like say in the market, summer market, the 2 minute orb is actually really good. We applied the 2 minute orb pretty much all summer market, and it worked out pretty nicely. We're going to a lot of this chop here as we enter the fall season and because we have a lot of high impact news. So the 5 minute just makes more sense so that you have more leeway with identifying where the range is at. So I agree with you too, Nick. It's basically same concept. It's just making slight adjustments based on the market volatility and the market regime, right? Because right now we're currently in this choppy market, so it makes sense to give a little more cushion instead of following on the 2 minute. Let me go over here real quick. I'm just gonna look at the 2 minute. Yeah, so the 2 minute over here, actually, we would have filled on this right here. It was a tricky 2 minute though. So I'm looking over here at the orb for the 2 minute. The orb for 2 minute actually would have played through. So the one, actually, no, it wouldn't. I take that back. Sorry. It would have been the same thing because we had the low here, we had the high here. I still wouldn't have gone to fill because price here broke on this candle for the 2 minute orb. So either way, I would have not have gotten my fill there. So it wouldn't matter if I took the 2 minute or the 5 minute. Still would have been the same outcome for me personally. Let's see. Solange said, might be a dumb question, but what if you used to get 1,000? What did you use to get 1,000 back test samples so fast? I used AI, Solange. So I use AI to get the 1,000 samples. So basically what I did is I put my criteria into the AI, like very specific criteria, like all my requirements, looking at overall market structure, looking at overall trend. Um, to do that, it's a little tedious because you have to give it like all the data, right? Like I had to put in all the indicators, I had to put in the code for it, um, and then I asked for the historical data for 1,000 samples specifically. I usually bump it up, so I'll start at like 500 samples, and then I go up to 700, and then I go up to 900, and then up to 1,000. Because sometimes AI won't have the data for it, but I was able to pull it up, and it gave me here. I have the win percentages here as well. Let me see if I can find it. So these were like the stop, these are like the data from moving. This is like moving stop loss and profit. 'Cause I was trying to figure out what would have the best criteria. So I just took off my stop loss and profit. So if I use a fixed 1 to 2, it'd have a 55 to 60% win ratio, but the expense expectancy was a lot higher. Full trail over here, lower win rate, but higher expectancy, and then the hybrid here. This is just too much work though. I wouldn't be able to do the hybrid because it moves too fast. Let me see if I could find the data for the strategies. Mm, where is it? Let's see. So this is the difference too with entry points. I was thinking, maybe we should just get in on the breaks. But looking at this over here, so like if you, because I know some of you guys take the immediate breaks, right? This is the traditional way of taking it. It's going to be the first one. As soon as price breaks past it, it has a 30 to 40% win rate. It's too low for me. I don't like losing that much. So I wait for the close outside confirmation, or actually I don't. I look for the third option here. So if you wait for the close, it jumps from 40% to 55%. But what I wait for here is I look for the actual retest, right? So since I wait for the retest here, it jumps win rate from 40% to over 60%. If you guys have been following my trades for the year, so my trades for the year, I'm currently at a 66.10% win ratio. So it's pretty spot on right now with where I'm currently at with regard to the numbers. So I'm trying to keep it above 60%. Obviously, if I stay above really 30 or 40%, I'm still profitable at the end of the year because of the because I'm doing a 1 to 2. So I just got to keep my win ratio above like 30, 40%. I'll be profitable. Ideally, you want to be above 60 so that you make basically double profit on that. But yeah, guys, I have a ton of data on the orb. So if you guys have any questions regarding the orb, I'm still going to be back testing it on a weekly basis. So I'm going to probably make adjustments as market volatility and market structure changes. But for the most part, I'm sticking to what I have right now. So 5 minute orb. Um, did I delete the window here? Yeah, 5 minute orb, wider TP stop loss, looser entry, and no more stop loss in profit. Just little changes there. We're currently in a market chop right now, so there's nothing going on, guys. Like I said earlier, I'm looking for price to break above this higher high for me to get that high-low break and retest. So here's where I haven't done my testing yet. I haven't done my testing on the continuations. I'm not sure if I want to stick with the 40-20 here on the continuations or also adjust this to 50-20. I think what I'm going to do here is I'll probably adjust it to 15-20, but I will be moving my stop loss and profit as it climbs up. So I still want to give it some leeway here. For my data, basically what I found is basically two times. You basically want to do 1 to 2 based off the ATR. The ATR is at 24. We've been having higher ATR lately, so this lines up with this here, right? 25, 24, 25 ATR, that's where my stop loss is going to be. And then for a 1 to 2, it's going to be double that, which is at the 50, of course. So I'll keep it at 25.50 for now. That's where the ATR is currently set. Maybe I'll make some adjustments. If the volatility drops down a little bit, I'll drop it down to 20.40, but I'm going to round up when I can. So. So we'll see what we got here. Anyways, there's no entry here yet, guys. Again, I'm looking for price to break and close past the structure. The lower part over here of the market is super, super messy. I mean, I don't even think we should even look at this lower part over here. I have a lot of market structure down here, but because price pushed up so high, this right here is pretty much pointless at this point. We have an imbalance here, which has some imbalance from this candle to this one right here. This imbalance has been retested, so this is actually a nice confirmation confluence. So we had price over here break past the, try to zoom in a little bit. Yeah, we had price break past here. So it established the imbalance from this green candle to this one. The push up happened from this big one right here. Basically, price broke above it, retested, confluence for it to climb up higher here. The only thing that you want to be careful for and just really pay attention to is the fact that price here is currently now ranging, right? This becomes an issue because if you're looking for price to break and close past this structure, which is what I'm doing right now, I'm looking for price to break past this. There's a high probability that price is going to fake out, right? This is ideally best case scenario. The worst case scenario is price continues to range and then it fakes out right here and pulls back into the range, right? So you want to be careful with these entries. This is why I'm doing a lot of focus on the orb entry, guys, because I don't want to be caught in the follow-up chop here, right? A lot of times, if you have noticed, guys, it's been like this for like the past couple months. Market volatility is pretty nice between 6:30 and 7 o'clock. Once 7 o'clock hits, the market just goes pretty much flat. And that's exactly what's happening here, right? We had the big bullish push right here. Now the market's flat, and it's pretty much flat until 8 o'clock, where my cutoff for trading is. The other thing that you want to keep in mind is that today's Fed day, right? We have the interest rates coming out later at 11 o'clock. So we were expecting this. This isn't a surprise to us, right? We were expecting the market here to pretty much go into chop for the entire session. So, um, yeah, we just got to wait and see. We have a new high here, guys. So unfortunately, this is no longer going to be the level that I'll be looking for price to break and close because we have a high and we have a low right here, right? So this means that this high has been established. And if you're looking for a high low break and retest, it's actually going to be on this lower level now here. It's going to be at 46.18, 46.418. Only problem with this is that price. So this is what we're starting to see. We're starting to see a squeeze. If you guys are familiar with the squeeze here, whenever price is done squeezing, it's going to break out to the upside or it's going to break out to the downside. So you're kind of at a gamble right now because there's not really much of a direction as price continues to squeeze tighter. So that's kind of what we're expecting here. We got price squeezing like this, and eventually it's going to break out of the squeeze to the upside or the downside. So just something to keep in mind there. We'll keep looking for opportunities here. Obviously, there's nothing for me to take right now. I still have a bullish bias. So looking over here at market structure, it's pretty much bullish on the 5 minute, 15, 30 minute, 1 hour. Let me take a look at my other scanners over here. It's pretty bullish across the board. So I'm pretty much bullish on money flow. Reversals are pointing to the upside. The divergences are bearish right now. So it's currently pulling back, but it may shift back up. Here, I'll just take a screenshot of this so you guys can see what I'm looking at. This is what I'm looking at right now. So this is my screener. I'm looking at a lot of different things right now. A lot of things here are bullish. Signals are overbought right now. So price is coming down the lower time frames, 1 and 5. Money flows up. Reversals are pointing up. Divergences are bearish. That's retracing right now. Confluences are strong to the upside. This is what you see in the chart right now. Very bullish. And this is what's looking like on the bottom. And these are just different strategies. They all point to the upside. So we do have a very strong bullish bias right now with regard to direction of price. There's just nothing here to take right now. So I have multiple screeners, guys. I mean, I got a lot of stuff here that I'm looking at. So that's one of my screens, right? My other screen over here is a market structure, which is not as useful. So you can see over here, I have a lot of market structure on this one on the 1 minute. You can't see it on my chart because I have 3 different screens. I have one screen with just the screeners. I have one screen with my market structure. You can see over here, this is the imbalance that I drew up. So I actually have that right here already. I just have the important stuff up. I got the market structure down here. This is irrelevant. We have the big imbalance right here. I didn't even draw that because it's pointless. There's imbalance right here, but price is not, it's not really coming down to that area. Um, and we have a strong high. So the strong high right here, if price breaks past it, it's probably gonna keep pushing further. It's 97%. So just to give you guys a little heads up right there, I'm looking at this from a lot of different perspectives. I know we have one screen right here, but I have a lot of different perspectives here to give me confluence and confirmation. So, ever since I passed the test, like I said, all my trades here are pretty much they're public knowledge. So I have to be very selective with the entries that I take because once my new hedge fund clients come in and my bigger clients are going to look at all my trade history here, and they're going to want to see that I'm pretty conservative with my entries. The difference with trading, as a retail trader and trading as a professional trader is that the goal here isn't really to make, like, I'm not here to call a lot of wins, right? I'm here really to manage risk. So for the most part, that's the big difference between because I'm already making that gap right now. Like basically, I'm bridging from retail trader to more of a professional trader with with uh, with the new application that I have with the NFA. So I have to be a lot more conservative because the thing is, I don't want to have a lot of losses on my, or not even just losses, but in general, not no dumb trades or bad trades. It's okay to have losses as long as the criteria is met, but I got to follow the trading system and the trading plan accordingly because my track record is going to speak for itself for the future clients that are going to be coming in. So yeah, if you guys are new here or if you guys have been here for a while, you guys know that I used to trade a lot more riskier previously. So I've been trading live with you guys for about 8 years. Probably the first half of that time period, I was taking a lot of riskier trades. I was taking quicker scalps. If you guys remembered, we used to do a 1030 scalp for most of our trades here. I can't really do that with the hedge accounts because it's too risky. So now I'm going for a higher risk to reward. Um, and lesser trades. Lesser trades, but higher quality. So we have a possible high-low break and retest right here, guys. I'm not going to take it because you can see how price here is kind of chopping up a bit. If you guys do want to take it, it looks like it just filled right now. This is a high-low break and retest at this point. The problem is the volatility is very low, and I'm worried that this here is going to fake out and pull back into the range like it's doing right here, right? That's why I skipped out on that position. Because if anything, I'm looking for price to break past this high right here, not this lower one. So I'm not in this position here. If you guys do want to take it, go ahead and take it at your own risk. Exactly what I said earlier. I'm taking very conservative trades, so I'm not taking this one right here. Looks like my worries there were true. And you see how price here faked out and it pulls back into this chop. So that's why the analysis here is really important. It's important that you guys analyze this from, a lot of different perspectives because this will prevent you from getting caught in a lot of this fake out. So for the most part here, this chop right here is pretty messy. Not to say that this here is not going to continue climbing, um, but this here obviously price is going to go sideways for a bit. I don't even know if we're going to get some directional moves here. I think if anything, price might just continue to squeeze down this middle area. It might be a pretty long squeeze. So let me show you guys real quick. Like this squeeze might extend out pretty far. This would be called an ascending triangle. If you guys are familiar with this pattern here, this is called an ascending triangle if price does climb up higher. So this would be an ascending triangle. This would be a descending triangle. Thing is, you got to wait for that confirmation. Well, I mean, looking at my swing trades, it does not look like they're going to get filled right now. I'm still expecting close to a 100 to 500 point drop once the interest rates come out. So later at 11 o'clock, I still have some leeway over here. I can possibly move my target up a little or my entry a little bit higher to the 46,000. It's currently at 45,750 down here. I don't think that'll get filled. Looking at my NASDAQ over here as well, this is way too far out. I mean, this might have to get pushed up a little bit. And then same with my ES trade over here. My S&P is pretty far out. So I prefer to have it far out, pushed far out. If price does drop further, then I can probably look for a possible entry when price does recover back up. But right now, I'm leaving my swing trades lower below until they have opportunity to get filled. All right, so this high here has been invalidated. We have new higher high right here. New higher high, but there's not anything going on here. You can see that the chop here is just getting tighter and tighter. Yeah, PC said, I think Nick's orb sounds pretty good. Volume is a telltale. Yeah, I agree with you too, PC. Yeah, what's up, Manny? No news for me today. Well, I'm trading right now, but definitely no news later at 11 o'clock. For my swing trades, I'm gonna leave my positions waiting right there, Manny, but I'm not necessarily I'm not looking at to get in like right away. So I do have my pending limit order over here. This is for my swing account. I have my limit order at 45,750. So if price does come down, I'm okay with filling it. My stop is going to be down here, so I have a lot of cushion. So if price drops to 500 points or so, I'll get filled right there. I have another 500 points cushion here if price does drop further, for it to pull back, and then I'll see if it pushes up. But yeah, I will have my pending order just waiting there. I don't think it's going to drop that far though. If it drops this far, it's going to have to drop almost 1,000 points, right? I'm not expecting that big of a drop. It's only 25 basis points that we're looking at, so it's not like it's not a black swan event like COVID or anything like that where it drops like 2,000 points. I'm expecting a drop, but nothing too crazy. 500 points, I think, will even be a stretch, but That's kind of what we're going to expect. So let me go on the higher time frame real quick. Let's go like on the 1 hour. Okay, so looking at this here, there's a lot of support levels here, right? We have news coming up at 11 o'clock later today, like right here. Let's just measure how far of a drop that I'm expecting. Okay, so price may drop to these lower levels right here, so maybe a 300 point drop. The 500 point drop is going to be really, really far. Like I mean, this is a pretty big spike, right, for one candle. So that's why my stops or my limit order is going to be waiting right here around the support level. So if it drops about 500 points, I'll be able to get filled right here, and then I'll ride this right back up because there's going to be a correction, of course. This is where my entry would be, and then my stop would be way farther down here, another 500 points. So see how I'm okay with this here? That's why I'm just going to leave it sitting because I'm not expecting price to drop this far. This is an extreme drop, right? 1,000 point drop, that's very unlikely. It might drop 500 points or close to it. So if it drops right here, my swing trades are going to get filled and I'm going to ride it back up. In order for my swing trades to get stopped out, it has to drop all the way down here. So I'm not expecting that to happen. It's not an event where the market's going to crash, right? There's going to be a lot of speculation, but the market's not going to crash. Maybe if we had 50 point basis drop, like if it was a 50 point or 75, maybe a big drop, but it's 25 points. So the retracement to the downside or pullback, probably not going to be that far. Let's see. PC's asking, why are you expecting a drop? I'm expecting a drop because everyone's expecting price to go up, right? If the interest rates do drop, then dollar goes down and then people put money into the market, right? So I'm doing the opposite of what everybody else is anticipating. So if everybody's anticipating price to push up, then I'm expecting price to come down to stop everybody out and then come right back up. That's what I'm saying. I'm trying to buy the dip and then the correction back up. So I think long-term price is going to keep climbing. Short term, I think price is going to drop to stop everybody out. Price is overextended right now. If you look at price, it's pretty much baked in already. Like this thing's been pushing up for how long? Ever since they started talking about the interest rate cuts. So like, let's see, let's go on a 4 hour. Actually, it's going to make more sense. So ever since there was talks of an actual cut happening, price here has been climbing up, right? So it's baked in right here. Price pretty much started climbing from here. Everyone's getting hyped up about the rate cuts. So hype up right here, hype up right here. I'm expecting these people to pretty much get pulled out of their positions. Like whoever can't hang on to their buys right now, which is majority of traders, right? Unless they're institutions, of course. Institutions can hold it for like, 500,000, 2,000 point drop, and they're not going to do anything. They're going to hold on to it. Price can push back up. I think the interest rate news is going to shake out a lot of people who are trying to ride this wave to the upside because not everyone can hold a big drop like that, right? It's being enough to shake people out. Like, let's use this candle, for example. This candle was news on NFP, right? The NFP data or whatever data, the data that came out on this day, this was NFP day. It spiked price down, right? So this here was a spike of 500 points. That's why for me, I'm gauging it at about 500 points drop and correction back up. So see how this here pulls down and then pushes right back up? Everybody was expecting NFP data to be positive. It was like super negative. And then it came down and then it shot right back up. So I'm not expecting there to be, a reversal of market. I'm just expecting there to be a shakeout because majority of retail traders are going to be gambling that news event. Interest rate cuts is like one of the bigger news events. If any of you guys here have seen like the biggest news events with highest manipulation is going to be CPI, PPI, or I'll put them in order. NFP, CPI, and then PPI. These are like the main events that'll like really cause the biggest manipulation. Like for example, if NFP data is showing that, or if everybody thinks the economy is doing well, everyone's going to buy for NFP, right? What happens a lot of times is like what happened this month and last month is price pretty much shakes out all the buyers and then it comes right back up to where it's supposed to go. Same thing with like today's news event, right? Everyone is expecting price to go up. Like if you look at my market outlook over here, so here is my market outlook. So for the fundamentals over here, FOMC is expected to cut 25 basis points bullish if Powell signals more easing ahead. This is obviously if he's going to make cuts, there's going to be easing, right? So everybody's expecting price to go up. That's why I'm looking for price to be people to be shaken out, drop maybe 200 to 500 points, and then a correction back up after. So it's all speculation, though, right? You can't really predict news, of course. Even if you predicted news properly with regards to fundamentals, like for example, the fundamentals here indicate a bullish push. Price can easily push down initially and then shoot right back up. And that's what I'm expecting. I'm expecting that it's going to do that to manipulate people out and then it's going to come right back up. Let's see where the all-time high is right now, actually. I'm curious we're at the all-time high almost. Yeah, we are. Or we are at the all-time high right now, actually. Well, this year is not really going to be the real all-time high because we switched over to a new contract, but basically this is the all-time high at the moment. It's at 46,434. See how far are we from the all-time high? We're not that far. We're like 100 points. So I guess we'll see. But till then, price here is still going to keep chopping up and down this middle area. I don't think much is going to happen here. I've been looking for a possible opportunity here for entry, but there's not much here to look at. There is a possible high-low break and retest, which came up right here. Obviously not one I would take because it goes against my criteria. I'm looking for trades in the opposite direction for buys. But this is a high-low break and retest to the downside. We had price break and close past this higher low. Price retested on this green candle. And it's now dropping down lower into this imbalance. So one thing to look out for here is if this imbalance gets mitigated, we'll see if price starts to drop from here. We had a change of character right here at this higher low. So basically price was bullish here. Price was climbing, climbing, climbing. This was a reversal right here. Price broke past the structure. It's now flipping back to a bearish downwards push. And the change of character happened right here at the higher low. So here, I'll take a screenshot of this to show you guys my other chart where my market structure is marked up. All right, so see right here, guys, I have the change of character, which is change of character, change of structure, whatever you want to call it. It's right here at the higher low. Price broke past it, turned bearish. Now price is coming down. We're now retesting this imbalance right here. So we're retesting this imbalance. There's one of two things that may happen at this point. Price is either going to bounce off the imbalance and correct back up into the range, or it's going to mitigate this imbalance and drop down to this imbalance right here for a retest. So you can see over here, because we had that change of character, you can see from my market structure bias over here, it is the 1 minute's now bearish. Everything else is still bullish though. So if you guys like to look at price action, this filter over here pretty much identifies price action on multiple time frames. The structure right now is bearish on the 1 minute, but it's bullish on pretty much every other time frame. So what you can see here is a possible fake out and pull back up. Let's see, Talanji said, yeah, actual questions, not direct code. Just wondered since they don't see the indicators. Yeah, Talanji. So like for me, I had to put in the code for the indicators and then I had to like really explain it. Like I was like, okay, this is what I use to identify overall outlook, overall bias, overall trend, etc. So I use that as a filter. Another filter that I also use here is the VWAP. It's not really necessary because it lines up with my pivots, but I do use the VWAP here. So whenever I look to take entries for the orb, I like to see that there's a big gap between price and the VWAP down here. Although it's going to line up with my pivots, right? So I have my pivots on here. It's just an extra confluence to identify the uh, the direction of price. The VWAP is traditional, though. I think a lot of people use the VWAP to identify direction of trend or direction of price, and I just add that as an extra. But yeah, 3 years of data is pretty valid and it's pretty useful to show that the strategy is consistent over a long period of time. Yeah, if you guys ever backtest a strategy, make sure that your sample is like pretty big. Like I think at least 1 year would be necessary. Anything past that is useful, but then once you have that backtest to know that it's profitable, you have to really forward test it to make sure that it actually works well under live market conditions. And that's what I'm doing here now. I made some slight adjustments to the orb, and then now I'm making a um, a forward test to see how it works over this type of market. Let's see. Joe's asking regarding your backtesting of the new orb strategy, did you calculate the win rate using all possible entries or only entries that have aligned with your bias for that day? So I did a raw backtest with like a basic bias with just the VWAP. So it gave pretty much very similar stats. So with just the VWAP, um, it gave me about a 60% win ratio, a little bit above, so 60 to 65. And then using my biases with regard to market structure and pivots, I was only able to go back so far with that. I don't think I got a full 1,000 sample, maybe like 500 that was accurate at least. That gave me more of like a 65 and up win ratio. So closer to like 66, 67, somewhere around there. So it's a slight increase, but the slight increase makes a whole world of a difference, right? If you're factoring in, hundreds of trades. So yeah, it's about the same, but if you do it on a longer scale, because we're doing this long term, right? So like, of course, I want this to be profitable for the entire year, not just for like 1 month, and not even just a year, but like for years and years to come. So that's what I kind of came up with. Um, so, I realized that like moving stop loss and profit, yeah, it gave me that kind of dopamine rush that like, okay, I won the trade or I protected the trade. But long term, the profitability of expectancy was like a lot less. Or not a lot less, but it was lower than like, a point or two. Let's see. Sam over here took the full TP, so he took the buy from 46,300. Nice work, Sam. Sam over here caught the bounce, 46,300 right there. Solid. So here's one thing that I'm looking at. Usually I delete the imbalances, but one thing that I started to notice is that price will tend to fake out on the imbalance. And if it pulls back above here, I mean, it's basically like a head and shoulders pattern, right? Shoulder, head, shoulder, back up into the range. Ideally, I'm looking for buys here. We don't have any yet, but that is for the most part what I'm looking for here. Yeah, Sam said sometimes the 1 minute orb can turn into a beast. Yeah, when the market's not super choppy, if we're in a trending market like how we were in like earlier in the summer, we were killing the orb. Like if you guys looked at the orb from earlier this year, this month has been kind of choppy, of course. So I haven't really been hitting it much. My risk has been kind of low. But the previous months, there was a lot of entries here that could have been taken. But you can see over here for August, we did really good. July, of course, really good. A lot of the orbs here were hitting along with the continuation moves. June was okay too. And then May was okay. So we started picking up like earlier in the summer. The market here wasn't so choppy. It was more of a directional move. And the orb here was pretty much killing it from June, July, August, and then, into September here, we're kind of flattened out, which happens, that's just how the market works sometimes. It's really just sticking to the trading plan. Let's see, Singh said rough day, tempting a long on this pullback, or else we'll be done for the day. Yeah, I mean the chop here, as soon as the chop pulled into this area and it started chopping, I already knew this was going to be a tricky day for the most part. I'm assuming you try to catch the bounce right here, right, Sing? Which makes sense. I mean, this could have been a double bottom, but I was expecting a possible fake out here. So there's two things to look at here, guys. Looking at the imbalance, either look for the continuation down lower or look for the fake out here and swing back into the range. Oh, order block. Sorry, I misread your message there. Yeah, Sam said the 1 minute order block on the 46 300. Okay, nice. Yes, you got the order block from this big push right here, right? Yeah, I could see that. Flatlined right there, and you had your order block chilling from this area right there. Nice. Yeah, no, I can see that. Yeah, Sam said the only trap seller in the whole impulse buy more. Yeah. I'm still expecting a correction back up here, but looks like here, market might get flatlined here. What I'm looking for is a confirmation and confluence back to the upside. Right here, you can see price is kind of just stuck within this imbalance. I'm looking for this here to fake out or maybe consolidate here for a little bit, fake out, and then push right back up. ATR is dropping down a bit, so the market might just stay flat from now until 8 o'clock. My cutoff for trading here is 8 o'clock, guys. Obviously, I'm looking for entries, but if nothing comes up, not forcing anything here. It's a lot better to be safe than sorry on a day like this because today is Fed day. Hey, what's up, Brock? Brock said, is the breakfast already served, or are we still looking at it?" So two entries came up for the day, Brock. Other than that, market here has been pretty flat. So price initially pushed up for the first, we'll say like 15, 20 minutes. The momentum breakout over here hit full TP for 100 points. And then the orb over here, so the orb's still technically active right now, guys. I wouldn't take it because it happened super late, but this is actually the orb. So if you were taking the orb later in the day, this is the 15-minute orb actually, or not the 15-minute. This is the 5-minute orb. So let's clean this up a little bit. So the orb that I was talking about, this is one that we try to get into. We were going to get in at 46 315. Yeah, right here. So the orb technically is running right now. This is the orb, right? Because we never got a fill over here. So it filled over here. It was really late into the session, but it did finally fill right here. And now it's pushing up into profit. So if you guys don't have your filters on, like for me personally, my cutoff is going to be, I start to look at the orb and I start to think whether I want to take the trader on 645, but 7 o'clock is usually my cutoff for the orb. So I wouldn't have even thought to take the orb right here. But if you guys aren't using a filter and you're kind of just taking it whenever it comes up, the orb here is actually active and it's running in profit because it finally came back to retest, but it came back to retest super late in the session. And it looks like it's about to hit for 50 points right there. So, I mean, it depends on like which criteria you guys are using. Like I said, I'm trading very conservatively, so this would never even cross my mind to enter this trade so late in the session. It's at 7:16, but full TP right there for the orb, guys. So technically both of the breakouts hit today. A really late orb entry over here, but the criteria here still lined up perfectly. We were looking for buys. Price pushed up super heavily, basically missed the move there because it never came back to fill. And then there's where it's at right there. So, I mean, looking at this right here, there was just a lot of confluences here because even with Sam, he was looking at the order block right here. So price pushed up, created an order block, retested, and pushed it right there. Pretty much retested the orb. You took that later, Sam? What was your criteria for this one here? Were you just following the late test of the orb? Or do you have like different criteria? Sorry, I wasn't even reading your messages earlier. I was too busy analyzing. Looks like, I mean, I could kind of see what you did there though. Basically later orb. A lot of, so if you guys look at the orb here, guys, price respects the opening range like pretty strongly. So if you look over here, I mean, sometimes it never comes back to retest, right? So like this is the orb from yesterday. Price never comes back to test it, but the orb actually it acts as a pretty strong confluence for market structure. So I mean, obviously, it didn't retest here on Tuesday. Here's from Monday. So see how it respects it. Price always comes back and retests the orb. A lot of times it's choppy, but in a lot of instances, if it pushes away from it, it tends to come back. So see how price pushed away from the orb right here on Monday? It eventually came back to retest it and it came back down. So I like to use the orb here as a confluence, especially if I'm looking for buys. So there's basically just two entries which came up for today, guys. The orb entry right here, the momentum breakout right here, full TP for 100 points. And then I was looking for a continuation here, but there hasn't been a high-low break and retest. So for example, right here, this lower high, price broke past it, but it never retested. So even if I wanted to take that entry right there, there's no entry for me to take. All right, we're back in this middle range. We're back in this middle range right here. Personally, I don't like taking trades in this middle range, but we'll see. Let's see. Baroxid. Yeah, I missed the MPS V2. That would have been golden. Yeah, so there's an MPS V2 which came up over here pre-market. Nice push to the upside. There's another MPS V2 which came up right here. Part of this push up. There's a couple MPS V2s which came up here. There's an MPS V2 right here for a sell as well. So you got a lot of MPS V2s along this. And there's possibly another MPS V2 right here. So there's a buy signal. If this candle right here retraces, then the continuation back up is going to be the MPS V2 if it does close above this area. Man, I'm really tired of this choppy market, guys. I'm hoping by today or by later today, once the interest rates come out, I'm hoping we're going to have more of a directional trend. But this is kind of like where the market has been for the past couple of weeks, if not past couple of months. We have a lot of bullish, we're not really bullish, but we have a lot of momentum and volatility on open. It tends to happen and then it dies out after the first 10, 20 minutes. So I'm hoping with these changes to the orb, we'll have more probability of entries appearing. But I'm going to stick to my trading plan, right? I think the key thing is really sticking to your trading plan. If your entries don't come up like they haven't been coming up for me, it's better to kind of just sit out. It's better to sit out and wait. Let me check my market structure over here. So we have an imbalance here that's being retested. Let me clean this up. This imbalance was mitigated, so it's no longer valid. We have an imbalance right here, which is being tested. It's a small imbalance. All right, so we have a break and retest off this imbalance right here. We'll see if this gets mitigated. There's also another imbalance below it. Basically two imbalances. So we have this upper imbalance right here. If this here breaks through it and closes, this will mitigate this imbalance. But if it doesn't, this could be a confirmation of a retest of this imbalance. So just watch to see where this here ends up closing. If we get a wick rejection off here, this could be a continuation to the upside. Or if this gets invalidated, it can still drop down lower. Looks like we're gonna get that nice confirmation right there. So here's a break and retest of this imbalance. If it mitigates it, it's completely fine because we'll have a break and retest off this lower one. Cool. So now I see your messages. Let's see. All right, so price scan right here is retesting the imbalance. Again, look for how this candle here closes. If this red candle closes below this green box, it's going to invalidate and mitigate this imbalance. So I'm going to delete this if that happens. We have another imbalance right here, though. So this can easily come back down and retest this one and push back up higher. Possibility. Not for sure, but possibility. You can see how this right here, it's again failing to close below this imbalance. So the fact that this here keeps testing it shows you that this is a strong imbalance. Yeah, let's see. Barack said, see, Barack said the imbalance around 46,280 looks solid. 46,280. Oh, the one down here. Yeah, the bigger one down here too. It hasn't been tested yet. I was waiting for that one to test at some point. Sam waits for another 5 minute break. Okay, gotcha. Nice. Yeah, I know. So looking at your criteria there, it looks like it lines up with what we talked about, which makes a lot of sense. So you wait for it to be a valid orb, then you look for another 5 minute break. Okay, cool. That makes sense. Yeah, I agree with your analysis there. So basically a retest of the orb, which is pretty much what we talked about earlier, right? How it respects the orb level. And then you follow with a trailing stop. Nice. Okay, perfect. Yeah, that's good. So like for example here, if I was to do that, I'd catch the break and I would move my stop loss and profit to here, then to here. I'd kind of trail it up as price moved up further. And I probably would have gotten out somewhere around here. Yeah, Sam said also have not tested 2 minute orbs, so not fading those good people. 5 minute avoids bad trades. Yeah, I agree with you, Sam, 100%. The 2 minute orb is good in a directional market and in a trending market, but we've been in a choppy market lately, so the 5 minutes actually superior with this type of market that we're currently in. The ATR is dropping down, guys, so if you guys are looking to take entries here, just keep this in mind. As the ATR drops down, it means we're going into a heavier chop, or not even a chop, we're going more into a heavier consolidation. So this right here, I would consider this a chop, right? Because price is chopping up and down. Right here, these candles are getting a lot smaller. So this is more of a heavy consolidation versus, what we call or consider a chop. So this imbalance here got mitigated. This is what I've been kind of telling you guys earlier. So look to see if price breaks past this imbalance, which it did on this red candle. So this here is now mitigated. The good thing is that we have another imbalance right here, which is going to work out to our benefit. The thing here is that we have two imbalances now. Let me show you guys this imbalance. We have a imbalance from the upside. So price might just consolidate and range within this imbalance here, these two imbalances. Just, food for thought. Just keep that in mind. Now, what I would say to look out for here is look for the mitigation of this imbalance. So there's two things that may happen here. Let me give you guys a couple of different scenarios. So one scenario here is price stays and consolidates within this middle area. So it just consolidates sideways. The second scenario is price mitigates this imbalance, climbs up higher. Then we have opportunity for possible break, high-low break and retest right there, right, for a buy. The third scenario is price mitigates this lower imbalance and it drops lower here as we pull back to open, right? So the target area here, if price does drop back down, is back to opening price, which is going to be down here. Are the sessions on? I just realized I don't have the sessions on here. Weird. For some reason, I always accidentally delete the sessions. Okay, there we go. I gotta make sure to know that that's on right there. Okay, so we're currently actually sitting at the New York high and the London high right here. So, okay, this makes sense why price is respecting this area, right? Because price came down. It's basically bouncing off the London and New York high right now. So if price holds above this area, buys could be pretty valid. Um, okay, so there's a possible high-low break and retest happening right here, guys. Off this higher high, it's gonna be at 46.39, 46.386. 46.386. I'll be watching this here for a possible high-low break and retest. Okay, so price has mitigated this imbalance. Delete that. Actually, I'm gonna leave it up real quick. I'm gonna look to see if we have a break and retest of this to the upside. I think 50 points is going to be really tricky right here, guys. If you guys are looking to take this here as a high-low break and retest, I mean, be ready to possibly move your stop loss and profit. Let's see. Sing said got tapped out, break even. Thanks for the stream. See you tomorrow. Yeah, definitely, Sing. We'll see you back here tomorrow. So Sing's done for the day. He got out break even on his last trade. So, I'd rather have a break even than have a loss, of course. It's a nice cover on that trade. So no break and retest off this yet. What we're looking for here is for price to break past the structure, retest, continuation up higher. So we're looking for. Sam said, I just don't want to be loud about the 5 minute orb. Yeah, no, I get you, Sam, which is completely fine. You gotta protect your edge. I agree with you. All right, so let's see what happens here. Looks like we're getting a retest of this imbalance. So I like this here. Price broke above it, retest, possible continuation up higher. The thing is, we're still stuck in this chop. So like, no matter what happens here, this chop is still remaining. Same chop that we've been looking at since basically 7 o'clock. It's been in this chop for about an hour now. Okay, so looking at this from my perspective, I don't even know if I'll look to take this as a high-low break and retest because now that I'm seeing this closer in a closer view, it looks like this here is probably just going to keep consolidating down here. See how price is having trouble getting past that higher high? I think that taking a buy here might be a little too risky in a sense because the volatility is so low. Yeah, see this candle? It's trying to get past it, but there's no power behind it. There's no volume. All right, if you guys want to take this here as a high-low break and retest, I'll follow it for you. I'm probably going to sit out of it, guys. I don't like the price action here. See again right there, price is trying to get past it, but every time it gets past it, it fails. It pushes past it and it wicks right back down. I think the volatility for this entry is going to be a little too, it's a little too low. Again, right there, fake out. Well, not fake out, but it failed to break and close. See that wick? It's not a good market here to take any directional moves. If you guys do want to take some trades here, I probably would stick to sweeps. So for example, over here, this high-low break and retest, this would be a pretty decent sweep within this imbalance. If you guys are wondering where the entry would be, I'd probably take it on the midline. See how price came down to the midline right here? Yeah, so still no entry here for this high-low break and retest. Again, here it's trying to break past it. If you're looking to take that high-low break and retest, entry is going to be right there at 46,386. Yeah, peroxide denied us and momentum scalp keeps disappearing. So there's an invalid momentum signal right here. I mean, it's still pushing to the upside, so that could be it. Again, right here, another fail close past the higher high. See, this here's like clear price action to avoid entries right now. Because although we are expecting price to break and close past this area, see how the volatility here is pretty flat? You don't really want to get caught in a trade here because if your target's 50 points, like just put this into perspective. If your target's 50 points and the candles are barely moving, you might get a back and forth here, and then you might get lucky and price may shoot up, or you may get unlucky and price will spike down and then push right back up. Right? For a lot of these entries, you want to see price to break past it, retest, and go straight through. So you basically want to hold on to it for maybe a minute or two and then have it break through and hit your target. What you don't want to see here is you don't want price to fill and then you just end up going sideways for like another hour, 30 minutes or so. And then, you're at a gamble at that point because when you're stuck in a market like this, you either are going to get lucky and it's going to push right into your target, or you're going to get unlucky and it's going to push to your stop before it pushes right back up. So you don't want luck to be your deciding factor for your entry. You want to be taking these entries based off skill and precision, right? There's no skill and precision right here because a lot of this is going to be based off luck. Reason why I say luck is because this range has already been established, right? This range has been established between this upper area and this lower area. So I say luck because you may get lucky where price pushes through, or you may get unlucky where price pushes down. Of course, we're expecting price to push up, but from now until then, the ATR is currently at 15. So with the ATR at 15, this is going to be the average candle size move, right? If you're going for 50 points, you see how many candles you're going to need for you to reach that 15, 15, 15, 15, 15. It's going to be a while. So technically this entry is filled. So if you guys are in this position, I'll follow it for you guys. I'm not taking this myself because like I said, the volatility here is pretty flat. What I'm going to do here now is I'm going to mark up some market structure. So we have a resistance right here, resistance slash supply level. Whatever you guys want to call it. I know some of you guys call it resistance, some of you guys call it supply. Doesn't really matter to me. It's the same thing in my perspective. So I'm just going to call it a resistance. We got resistance sitting up here, and then we have a possible support sitting down here with an imbalance. So this imbalance here was retested, right? See how price broken retested this area. So the buys here do look good. The only problem, like I mentioned, is that you might get caught in the sideways move for an extended period. So this thing might just go sideways for a good 20, 30, 1 hour. And you're kind of in limbo holding on to this. You're basically holding the bag here, right? You're holding the bag. You're hoping that the bag here does not, your profits don't fall through the bag and you get stopped out. You're hoping that it continues to climb up higher, but I wouldn't put chance at your I wouldn't put this trade at chance, basically. That's like what I'm trying to get across to you guys. Because the thing is, like, this can easily push down, stop you out, and then push back up, or this can easily just continue climbing up, come back down sharply, range between this area. And then when you get into this situation like this, where market is kind of ranging between this resistance and your entry point, is you're gonna encounter a lot of stress because you're gonna second guess your position, you're gonna maybe pull out early. Um, in a situation like that, that could really mess up your trade psychology, especially because the ATR is so low. So the ATR is now at 14. So expect the average candle to move about this many points. That's pretty much what's happening here. Moves up, moves down, moves up, moves down, moves up. In the best case scenario, this is what might happen. Price may just continue climbing up a little higher, and then hopefully eventually it'll push up and hit your target. Right? That's best case scenario if you're doing one candle per move. But again, for these types of entries, you're not looking for those types of moves. You're looking for a big push up or a big push down. Quick entry, quick exit. Looks like Brock's done. Brock didn't even bother to continue following the market. All right, so we got a couple of support levels here. We actually have another one, which is right here, or it kind of depends on what you guys want to consider it, support or a demand level, or sorry, supply. Is that right, man? I keep forgetting. I forget where I think supply is above, right? Supply is up, demand's below. Uh, that goes to show that I don't trade supply and demand, but yeah, basically it's support and resistance. So there's another level here, but the imbalance is already marked up this area. So I wouldn't really want to mess with it. Sam said, remember Friday, all the contracts are expiring, so market may be crazy. Yeah, so the thing with the futures market is that the September contract is going to converge with the December contract on Friday. So you guys probably don't know this. I only know this because I just took the Series 3, so I've been studying this. So basically, the nearby contract is usually going to be lower than the distant contract, right? So this right here, we'll say is we'll say this is the September contract, and then we'll say this here is the December contract, right? Which is where we're at right now. We're using the December contract. So with that being said, as they converge, so as we get closer to them meeting, the September contract is supposed to keep climbing up, and the December is supposed to come down lower because they're supposed to converge eventually, right? So eventually, when time passes along further, the December contract is supposed to get tighter, and the September is supposed to get tighter, and then eventually they're supposed to converge. So Friday's where they're supposed to have the convergence where they meet up at the same price. And then now we move over to the March contract. So then now there's going to be another contract right here, which is going to be the March contract. This is like typically how the futures market works. As we get closer to the contract close, they diverge. That's where the basis is supposed to meet. A lot of guys probably don't have no idea what I'm talking about, but this is typically how the market's supposed to work. When you get closer to the end of the contract, they're supposed to converge because it establishes that the cash price is supposed to match up with the futures price. So that's why, like for an asset like YM or US 30 or whatever, asset that's bullish, it tends to continue climbing up, and then eventually towards the end of the contract, it pulls back to converge, and then it climbs up higher. So just something to keep in mind, guys. You guys don't have to know this stuff because it doesn't always happen, but historically, that's how the market works. If market is moving normally, which it is. If you guys are curious like that, or if you're curious about like what that means, you can do your own research. Just research futures contracts, expiration, and then identify like how they converge at the end. Most of you guys are not, well, nobody here is a hedger, so it doesn't really it wouldn't matter to you. But that information is meant for hedgers and not even for like these types of assets. They're meant for like people who are like hedging actual commodities like soybean, wheat, hogs, live cattle, feeder cattle, etc. There's a lot of different commodities that are actually traded. YM isn't even like one of the main ones. This is more so of like a speculative asset where people trade it. They don't really actually hedge it. But there's a lot of different futures. So if you guys are not familiar with the futures market, most of you guys don't really trade anything else aside from YM, like myself. But if you do look at the futures market here, there's a ton of different assets that are traded, right? Silver, gold, platinum, copper, water. There's a ton of things here, coffee, etc. I had to learn all that stuff for the test. So like I understand kind of like different trading styles, different hedging strategies, different option strategies, stuff like that. Yeah, if you guys ever study for the Series 3, it's a lot of information that's like for the most part unnecessary for a trader like us, a retail trader, or I guess now I'm kind of moving past that. But yeah, the futures market is pretty vast. The market in general is vast and the strategies are vast, depending on your trading style. If you're a hedger, speculator, technically we're all speculators here, so a lot of that stuff is irrelevant. Anyways, guys, looking at price right here, it's doing pretty much what we just talked about. So we just discussed this. This is why I decided not to take the trade. See how price is not going anywhere? Even though this trade is in profit, this here would have been stressing me out because every time it would have came back to opening right here, I would have thought, okay, damn, I should have just closed out in profit when I was in profit, right? And like I mentioned earlier, the 50 points is a really far push. This is a really long stretch to reach for if price here just continues to go sideways. So this here was expected. We weren't expecting price to really do anything too crazy. We were expecting price here to go sideways. The reason for that's because of the news today, right? We have the Fed rate coming out later today at 11 o'clock. Right now, it's currently 8 o'clock, so about 9, 10, 11. In about 3 hours, they're going to release the interest rate news, right? Everybody here is expecting a cut. So with that being the case, I'm expecting price to come down, basically to shake out all the to shake out all the buyers here. Because if you look at my daily outlook, the key drivers for fundamental over here is going to be FOMC expected to cut 25 basis points, bullish if Powell signals more easing, yields falling, US dollar weak, gold strong, risk on supportive. So if you wanted to, because the dollar is going to go down. If you're expecting the dollar to go down, you're going to see gold go up. So if you look at gold over here, gold's been pretty bullish, and it's going to continue to be bullish because the interest rates are going to cut, and it's going to make the dollar cheaper. If the dollar is cheaper, the market tends to go bullish, but because everybody expects market to go bullish, you could expect some sort of manipulation to the downside. So that's kind of what I'm expecting. If you guys have seen my swing trades, I'm looking for price here to swing to the upside. I might kind of shift my swing strategy a little bit, guys. If this here doesn't get filled anytime soon, I'm going to be shifting it a little bit. What I'm mainly going to be shifting it to is really going to be based off the overall direction of price and overall direction of trend. So right here, you can see I have my windows set to like just 3 windows here now. I have a long-term window, I have a medium-term window, and I have a short-term window, which is 1 hour. Everything here is bullish. A strategy that I'm going to be implementing is basically based off the medium window over here. So what I'm going to be looking for is I'm looking for the candle here to close basically. And then for my swing trade, I'm going to be looking for price to, or I'm basically going to try to enter on the close of market. And then once the market is closed, I'll be writing that until the next day. Basically, it's a swing trade that happens on a daily basis. If the continuation continues in that direction, then I'll continue to hold it for the next day, and I'll just keep holding it. The thing with the swing accounts here, if you're trading with FTMO, is that you can hold trades for a really long time. You can hold them over weekends, you can hold them overnight. So there's no problem with me holding on to a position. I'll probably take like a somewhat decent contract size. And then there's going to be 3 different assets that I'll be looking at. I'll be looking at YM, I'll be looking at NQ, and then I'll also be looking at ES. So ES over here looks pretty bullish. If I wanted to buy and hold ES, I would hold on to it. For NQ over here, it's looking kind of mixed because price here is dropping on the lower time frame than 1 hour. My main asset that I'm going to be following though is going to be YM. So right here, it's very bullish. If price continues to stay bullish like this on close, then I will probably buy and just hold on to it. I'll give you guys an update on my swing position here. If that's the case, I'm probably going to cancel out my other orders over here, and I'll be getting into the Dow. So what I'll be looking for here is I'll look for the drop, which is going to happen later at 11 o'clock, and I'll try to get the dip, get in at the dip. We're currently at 46. Let me see. I'm going to maximize this 1 hour. I'm going to put the levels here. So the levels right here, I'll have it at the 25 mark. Okay, so depending on how this 1 hour candle here closes, for my swing count, I'll probably try to get in around the 400. Yeah, probably not the 25s. I'll probably have this over here at the that makes more sense. Yeah, actually not at the 400, probably down here at the 350. So I'll try to give you guys keep you guys updated on my swing positions. If anything, just pay attention a little later in the afternoon. If I do get in on the swing, I'll give you guys an update. I just got to see how market reacts to the Fed news later because I don't want to get in too early and I don't want to get in too tight. Anyways, guys, full TP right there. So you can see the trade finally hit. Tricky entry right there, but it did hit eventually. Ben's asking, how long do you plan to hold? What's your approximate TP for the swings? I'm going to be holding for about a 1 to 2, Ben. So I will typically hold on to it for, well, it kind of depends. So like I'm going to be testing out that strategy. And if that strategy works really well on the daily basis, then I'll probably hold it and then kind of flip it from day to day. Like if I wanted to apply it on Apex or something like that, I would just flip it on a day-to-day basis. So I would like open it on reopen and then close it before the end of the day the next day. And I'd go for a two, basically a 1 to 2. So if I'm doing it on a day-to-day basis, I'm probably gonna have a stop loss of about 100 to 200 points, and I'll probably aim for 200 to 400 points. On the heavier swings, so on the actual swing count here, my stop is going to be about like 500, and I'm probably going to shoot for 1,000 points because I'm going to go for that 1 to 2. So it's going to be different based off the swing and based off my day positions. I'm not going to be applying it on the day positions yet. I'm going to be mainly on the swings. So you should expect to hold on to it for maybe a couple days, if not a week or a couple weeks. They're going to be like legit swing positions, and then I'll be like following it right here. The time where I would probably flip out of the position is if we get an opposite momentum signal. So see over here how everything's bullish. So the 4 hour we have a buy signal, 4 hour or daily we have a buy signal, 4 hour we have a buy signal, 1 hour we have a buy signal right here, right? So I'll probably hold on to it until we have an opposite signal. So an example of it would be right here. See how we have this buy signal on the 1 hour? I would enter at the pullback. So the pullback would be right here at the 800. This is where my entry would be. And then my stop would be around like, I don't know, maybe 200, maybe 100. My initial target would be around the 200 right here. So that's where my initial target would be. But what I would aim for is probably for the opposite signal. So I can just hold on to it longer. And then as soon as I got that red sell signal right there, I would have closed out of my position. And I would have done, instead of a 1 to 2, I'd get a 4R multiple right here. So I get out around 400. So basically I get in right here. And this would probably be held for a couple days. So like this would be held for basically the 14th up until the 15th. So this is just 2 days right here. But in some instances, this thing would take longer. So if you go back over here, so look at this one. We get a buy signal right here. The market reopened right here. The entry would happen closer to like, we'll say the 550. And then the sell signal didn't come to here. So I would aim for 200, but I could get out later around like 600. So there's going to be a lot less entries. This again was like a 2 day or a 1 day move. It doesn't always work out that way though. So it's just we had a lot of volatility more recently. But if you look over here, there's some times where price will just kind of last for a longer period, like this one over here. This is going to be over a weekend, I think. Yeah. So this over here, you'd hold for about 2 days because you'd enter on Thursday and then you would exit on Sunday. So basically hold over the weekend. So it kind of depends on like which way you plan on applying it. You can always flip it day by day, or if you wanted to hold on to it like I'm doing, probably hold on to it for a couple days, if not a couple, or up to a week. Ben said, okay, got it. Thank you. Can you explain a little on the lot size? The lot size is it's kind of similar to like contract sizing. You'd have to like look up the calculator because it depends on like on your account size. So what I would do is so type in US 30. So this is what I would do. Um, I just Googled US 30 lot size calculator because that's what you're gonna be trading. So like say for example, if I'm entering at 46,000 and then my stop loss is we'll say 100 points away, right? So 45,900. And then depending on what your risk is, if you want to do risk or if you want to do dollar amount, like say if you only want to risk like 2,000 or whatever, right? Completely. Your account balance is 200,000, of course. You'd use two lot size or two units basically. So basically I'm gonna go in with higher because I'm going for bigger risk, but you probably would use like, a two contract because you want to keep within the parameters. You can lose 10,000 per day. So I mean two contracts could be okay. If you want to risk less than that, you just do 1,000 risk and then it would just be uh one contract size or one lot size. I would keep it low. So if you're going to be swing trading, you want to keep it pretty low. But just if you're looking for the exact contract size, you can just search up US 30 contract or position size calculator, and then you can put this in. But I would just keep it at like one to two contracts. Don't keep it too high because this is a swing position. So you could always add on. Like for example, here, one thing that I might be doing is so for example, if I enter a buy here. And say it just keeps limiting up, right? Like say for example, today's bullish and then tomorrow's bullish. I'll just buy another position. So I'll have one contract and then tomorrow it's still bullish, I'll buy another contract or another lot size. And I'll just keep stacking positions day by day. I think that's probably the best way to do it. So you don't over leverage yourself. Because yeah, you can just enter all together with two contracts and then you can lose it, or you can enter with one contract and just keep scaling in as price moves along. Anyways, guys, I think that's it for the entries for today. It's 8 o'clock. It's my cutoff for trading. The entry here did play through. So if you guys are just joining in or if you guys have been here for a while, let's just review the entries for today. We had the momentum breakout hit full TP here for 100 points. I'll just put this in the chat because I know a lot of you guys want to follow it and you guys want the statistics on this specific strategy. So this right here was the momentum breakout for 100 points. And then the orb over here, I'll just mark this up. I didn't take this entry, but I'll just mark it up so that you guys can see. And you guys have an idea of like the entries which came up. Orb entry right here for 50 points. And then we had a couple other entries here which came up. So the MPSV2 and then also a high-low break and retest, which happened right here. This one took a really long time for it to hit, but nonetheless, it's still an entry. We had a nice confluence over here, break and retest off the imbalance. So that's one confluence right there. And then we had price break and close past the structure right here for the high-low break and retest. And the entry did eventually hit, but it did take a long time for it to hit right there. So there's a good handful of good entries which came up, and I'll put this over here as well, just so that you guys have an idea. So you guys have an idea and understand, what's happening in the market right now. So this is going to be for the high-low break and retest. So entries are hitting. It's just the volatility is very low. You would end up holding on to this position for a lot longer than you'd like. But all right, guys, I think that's it for the day. If you guys have any questions, feel free to hit me up on Discord. Today was pretty choppy, like we expected. Again, if you guys are looking to trade, be very careful closer to 11 o'clock because we do have the interest rates coming out. You're probably going to expect a lot of choppiness from now until then, and then possibly some high volatility spikes closer to the end of the day. So, all right, guys, that's it for the day. If you guys have any questions, hit me up on Discord. Otherwise, I will see you guys back here tomorrow.